Welcome to the launch of our IC Intelligence Investor Call series. We're starting off with the recent Kenyan and Angolan elections. During the past few months, we've seen a spate of dramatic elections in sub-Saharan Africa. In Kenya, William Ruto stitched together enough grassroots support to beat opposition heavyweight Raila Odinga to the presidency. And most recently, MPLA clung to power despite Angolans backing the opposition in record numbers. We're really pleased to welcome you all on the call today, where I'm joined with some fantastic experts. My name is Dr. Desnay Marcy, and I'm the Chief Strategist at IC Intelligence. Joining me on the call is my colleague, Angus Chapman, Research Associate at IC Intelligence, and we are joined by our colleagues and friends, Dr. Alex Vines, Head of the Africa Programme at Chatham House, Janio Ambrosio, Chief Economist at Hemera Capital Partners, Angola, Fergus Kell, Research Associate at Chatham House, and Ali Khan Sachu, CEO of Rich Management Limited. I'm just going to take you through the webinar today. We will start off, Angus will take us through the headline insights, our house view on the elections from IC Intelligence. I'll then hand over to Alex Vines to give an overview of the Chatham House view of the political economy and the developments in these two countries. We'll then hand over to Janio to take us through the macroeconomic environment in Angola. And then we'll hand over to Fergus, who will take us more granular into the political machinations on the ground in Kenya. And then last but not least, Ali Khan Sachi will take us through the investment priorities for William Ruto, as well as whether his macroeconomic plan is likely to succeed. Thanks very much. Angus, over to you.
Thanks, Desnay. So with due regard to the quality of the people following me, all I'm going to do here is just sort of try and sketch and make sense of the election results and place them in the context of the political economy of both countries. And then I'll leave the more detailed, sort of forward-looking granular analysis to the people following me. So I think a good place to start to understand these elections in Kenya and Angola is to first look at the similarities between the two, because they were fairly significant. So in both, we had quite low turnout. So in Kenya, it was around 20% lower than the last time around, and in Angola, it was more like 30%. So we had a significant number of voters choosing not to participate, whether because of apathy or simply dissatisfaction with the electoral choices that they were being asked to make. We also had, as is the case pretty much everywhere in the world, but particularly in Africa, very strong economic headwinds. So particularly in Kenya and Angola, we had significant levels of debt and also inflation, which came to the fore during both campaigns and forced more sort of pragmatically, economically minded voting. Finally, we had, perhaps because of these economic pressures, economic concerns really trumping the sort of ideological or historical, or in the case of Kenya, ethnic affiliations that had previously driven electoral choices in these countries. So we had people making much more self-interested decisions, much more divorced from the sort of macro political affiliations that have previously driven their voting patterns. So this all seems to have combined to place the elections in both Kenya and Angola pretty firmly within a trend that we're seeing across the world, and certainly across Africa, of sort of anti-incumbency, anti-establishment voting, and particularly in Southern Africa, these sorts of legacy revolutionary parties that have been in power for sometimes decades, significantly losing the sort of strength of electoral position they've been able to maintain for such a long time. So with these similarities in mind, of course, there are also important differences, and I think these can tell us quite a lot about the differing political economy of the two countries. So in Kenya, the result felt really very pragmatic. So while it was still an anti-establishment result, it seems that both candidates made very inflated promises, and in the end, voters made a pretty pragmatic decision that William Ruto offered a better deal in terms of economic rewards, social protection, government transfers than his opponent, Raila Odinga. So when we look at policies like the Hustler Fund, which is a US $420 million per annum sort of startup or seed capital fund for micro, small and medium enterprises, particularly in the informal economy, and also promises of universal health, education and social security. These seem to really have been vote winners, particularly amongst the working poor, that formed a significant proportion of Ruto's sort of grassroots base. In Angola, on the other hand, the result felt much less pragmatic and much more defiant. So where Kenyans seem to have made a fairly sober cost-benefit analysis and decided that William Ruto offered a better deal compared to Raila Odinga, Angolans voted in really record numbers for an opposition that could never really, given the MPLA's stranglehold over the electoral processes and institutions in that country, actually gain power. So even despite the MPLA's narrow victory, winning about half of the count on the at least official tally, it seems that their legitimacy as the sort of unquestioned rulers of a one-party state and state apparatus seems fairly terminal. And when we look at the reasons why, it seems to us, at least, that voters have had enough of what they call broken promises. So in the last 20 years since the Civil War, voters have had to put up with economic stagnation, inequality, a failure to diversify significantly away from the oil economy and to deliver economic protection and inclusion. And this really seems to have made regime change somewhat inevitable, really. So whether that happens in 2027 or before then, it seems that the MPLA are no longer the sort of unshakable dominant political force that they have been in the past. One final thing to note, though, is that the MPLA did actually win about half the vote. So 50% of the people who voted do want them to remain in power. So it's not really fair to say that they're wholly illegitimate. While the MPLA's grip on power seems to be weakening and it's likely that they'll slip over the next few years, we can't say that in the minds of the Angolan people, they're a wholly illegitimate political force altogether, because that's simply not the case. So hopefully that gives some broad context for the election results and the sort of political economic contours that might have driven them. I'll pass now back to Desney, and then she can take it forward from here. Thank you.
Sorry, you're on mute. That was the saying of 2020. Thank you very much, Angus, for that very helpful overview. I'll now hand over to Alex Vines, Dr. Alex Vines, who joins us from Chatham House, where he heads up the Africa program. Alex, could you maybe take us and the audience through your view on these elections, please?
Thank you, Desney. And just to say, everything that I say and my colleague says, Fergus, are our own views. Chatham House doesn't have a view. It doesn't have an institutional view. That's one of the beauties of the institute. We're not a policy institute in that, well, we're not an advocacy institute in that we don't have a mandate that we have to fulfill in that way. So look, both elections are significant. The 9th of August election, when Kenyans went to the polls, was the most competitive presidential election in the country's history, in my view. So after 6 days of tallying votes, as we've heard, Deputy President William Ruto was declared president-elect, winning 50.49% of the vote. And Raila Odinga, the opposition leader, came in second with just over 48%, 48.85%. So this is a pivotal election, both for Kenya's future, but also, I think, for African futures. It's a really important one. And the way I look at it is that the Kenyan election result represents some continuity. So the result is a transitional one that has marked the 3rd time a sitting president handed over power to a successor after serving a 2-term limit. I think, Desney, that's really important, given that we still see some incumbents wanting to change their constitutions and run for more than 2 terms. And there's significant variability across the African continent in this way. But Kenya seems very stuck now to that precedent. And I think that's really important, that observing a 2-term limit. Another thing is that both of the contenders have dominated Kenya's political landscape for at least 20 years. As you know, Desney, both spoke at Chatham House a month apart from each other. It was Raila Odinga's 5th time that he's tilted at the elections. I've hosted him 3 times at Chatham House. And perhaps I think it's his final run for the presidency. Mr. Ruto, on the other hand, has served as deputy president for the last 10 years. And in some ways, although President Kenyatta was campaigning for Raila Odinga, former President Kenyatta, Mr. Ruto did benefit from some of the advantages of incumbency. It was kind of contradictory, but he did benefit from state assets. When he came to the United Kingdom, for example, to Chatham House to campaign, he was using state assets. He was driven around in Kenya, one limousine, and so on. And so, you know, there are contradictions that are very interesting here in that regard. It has been argued that, and this is something that Angus highlighted, that there were a lack of new alternatives. So, you know, there was voter apathy, especially among youth. So like we'll see in Angola, we had a collapse of the vote, and Kenya had its lowest voter turnout in 15 years at 64.6%. This election also in Kenya, from my point of view, saw a shift in political alliances from President Uhuru Kenyatta expressing support for Odinga rather than for his own deputy Ruto, which is what I've highlighted. That I think was quite significant. But I think it shows also the importance of regional and so kind of local politics and ethnic politics in Kenya that, and I'm sure my colleague Fergus will talk more about this, but that we will see that we saw that the Kikuyu vote in the end didn't really go to Odinga, even though Kenyatta was encouraging him to vote that way. So some of it, particularly around Mount Kenya, went for Mr. Ruto. So I think the local politics is really important. Now, Angola is a different case, and I think Angus is, I would disagree with him, that the really highlight point of Angola is a record level of abstention. Abstention increased to 55.17%, and low turnout was also very visible amongst the diaspora that was allowed to vote for the first time. And so, whereas Angus, I think, was framing this as a significant support for opposition, I think it was a significant statement of protest, and that this isn't necessarily a result where UNITA got 90 seats in the elections with 43.94% of the vote, that this was necessarily a full endorsement of the opposition. And so, will there be regime change? I do think you need to look deeply into the behavior pattern of national liberation parties of government, of which we have the significant cluster of them in Southern Africa. And I think the MPLA definitely has had an earthquake. It has had a wake-up call, but I think it will be learning from what's just happened. And it is at a crossroads. So does it liberalize? Does it use the context now of high oil prices, where it can reduce debt and it can invest more in social areas of the economy? Or does it become more repressive? And this is again where I caution a sense of that regime change anytime soon, party change is inevitable. Look at what's happened in Zimbabwe, where you have very much more contested, controversial election results and a lot more violence. Similarly, the difficulties that the African National Congress, Desney, in your own country has been experiencing recently, and indeed what we've also seen in Mozambique or in Namibia. So all national liberation movement parties of government are in trouble, but some are in more trouble than others. And the question is, can some modernize? Can they learn from the protests that are occurring? And that's where I think the jury is out for Angola. President Lorenzo, during his second term, has made a couple of speeches very clear that there will be local elections in Angola for the first time in their history. I think that will be a real important litmus test to look for. Will they happen? And how well does the opposition do? I mean, the big breakthrough for the opposition was to make the capital, Luanda, an opposition city now. So you need to win significantly, even in the constituency where João Lorenzo, the president, actually voted. But again, that was a lot of people in the presidency, not necessarily being natural UNITA supporters, but voting in protest, because Angola has had a hard time. It had the collapse of oil prices. It then went into COVID, and only now is it coming out of a recession after some 7 years. We will hear a lot more about the economy. And I think it's the performance of the economy that will determine the future of the MPLA and how it prospers over the next few years. It is also, like Kenya, I think, clear that this will be the last term of João Lorenzo. So he will be looking at legacy. And the new government that he has appointed is mostly continuity from the previous one. So he's put together again, or reappointed, a very good economic team that have the confidence of the markets. And one of the strange things, I think, was that, in fact, the International Monetary Fund was encouraging the economic team to actually be more careful about providing social nets and encouraging more social spending, for example, rather than tight fiscal prudence. I think that's going to be the message that continues for Angola. So I think the question again for Angola is, where does it turn now? Does it become more repressive because UNITA has made a significant inroad into the National Assembly? The 2/3 majority of the MPLA has been eroded away now, which also means that in a positive scenario, both UNITA and the MPLA will need to work more constructively. They will need to talk to each other to get new laws and particularly constitutional amendments through the National Assembly, whereas previously that wasn't necessary. So Desney, I'll hand back to you because I've spoken for just under 10 minutes as we agreed. Thank you.
Fantastic. Thank you. Thank you. Great to have such disciplined panelists on the call. Alex, I found that really fascinating, and, you know, especially the comparison between different liberation movements, you know, and how entrenched some of them are. And, you know, it will take a very long time, I agree, for us to see, you know, this changing, but, you know, it is slowly, but yeah, varieties in all different countries. And yes, also fascinating as well to see the change that has come, you know, with ethnic support of candidates in Kenya. Really would be looking forward to hear what Fergus has to say about that later. But I'm going to hand over now to Janio, who welcomes us from Angola, where he is chief economist at Tamara Capital Partners. And Janio will take us through the macroeconomic conditions in Angola, the business priorities, investment priorities, and yeah, whether the MPLA can get all of these across the line, you know, to service the kind of demands of international investors and attract inward investments. Thank you, Janio.
Thank you, Disney. About Angola, Angola is a country whose economy is recovering after years of economic crisis, originated in the oil sector with a brutal drop in oil prices in 2014. The GDP is projected to grow 2.9% in the current year, and I have to remember everyone, or people who don't know, the GDP of Angola contracted for 5 years from 2016 to 2020, influenced by macroeconomic imbalance, austerity measures, and the COVID-19 pandemic. This year, the inflation rate reached 18.60%, but this is a high number, a high level, but is significantly below the 41% recorded in 2016. This improvement is influenced by the increasing interest rates by the central bank, the exchange rate appreciation, and the establishment of the strategic food reserve, which aimed to guarantee the acquisition, storage, and distribution of more than 350,000 tons of essential goods. The unemployment rate stood at 30% in the second quarter. In the young population aged 15 to 24, the unemployment rate reached 57%. The population is around 53 million inhabitants, with a population growth rate of approximately 3% and the average age of 21 years old. About 48 are children under the age of 15, and about 50% are people aged between 15 and 64 years old. So we are young. Generating enough jobs for a workforce that is growing at such a rapid pace during such a deep economic crisis, with austerity measures adopted with the IMF and the COVID-19 pandemic, is a very difficult task and explains part of the high level of unemployment. The idleness of the workforce is one of the main economic and social challenges here in Angola. But it also demonstrates the country's high untapped potential in terms of production capacity and demand. The performance of our economy is positively correlated with the value of oil in the international market. Oil represents a third of Angola GDP, 2/3 of fiscal revenue, and more than 90% of our exports. So is the main source of foreign currency here. And the sharp drop in the price of oil exposed the main weakness of not having a sufficiently diversified economy. But the current rise in oil price, generated by the sanctions on Russia and the production cuts by OPEC Plus, have increased Angola's tax revenues, which will allow for the early repayment of part of the external debt. The public debt reached 63% of GDP. That means it's high, but 2 years ago was above 155% of GDP. Angola is a country with a public sector-led economy that has been trying hard the transition to a private sector-led economy. As a result, the government of Angola decided to implement an ambitious program of privatization of more than 195 assets, with emphasis of the sale of stakes in 3 important banks via the stock exchange, and this helping to boost the Angola capital market. The program also provides for the sale of stakes in the national airline, TAG, the largest insurance company, ANSA, in the Angolan stock exchange, Odiva, that will happen in next years. In 2018, half of the budget was financed through debt issuance. In 2022, current year, the percentage reduced to just over a third. Seems not much, but is quite improvement. This evolution can be explained by the tax reform that increased the relevance of non-oil taxes and culminated in the implementation of the value-added tax. Yes, the value-added tax and some other taxes, but okay, less relevant than the VAT. Since the beginning of the crisis, a relevant part of the state's expenditure has been destined to the fulfillment of debt service, leaving little room for economic stimulus. In 2018, debt amortization expenditure equaled the fiscal revenue for the year. By the current year, debt amortization has reduced to around 50% of tax revenues. Angola remains very exposed to international markets, imports foods, raw materials, machinery, and fuel. Therefore, the exchange rate has become an indicator with great social relevance. With the previous fall of the oil price and shortage of foreign currency, the fixed exchange rate arrangement has become more difficult and costly to defend. That's why Angola adopted a flexible exchange rate arrangement for 2014 to 2020. Kwanza, our currency, had depreciated by 80% against the dollar. This year, the Kwanza has appreciated 20%, reflecting the recent stability achieved in foreign exchange market. International reserves or foreign reserves are stable in 13 billion USD, equivalent to more than 6 months of imports. For the coming years, Angola has gigantic challenge in terms of reducing the infrastructure deficit, improving the business environment to attract non-null foreign indirect investment, improve public services related to health, education, public transport, reduce unemployment and poverty, like most countries in Africa. But we have seen significant improvement in many economic indicators compared to the recent past. And the year 2021 marked the end of the IMF Fund Facility Program in Angola, with 6 positive reviews and a lot of unpopular measures. Public debt has significantly reduced, as I said before, and Angola has greater fiscal space to adopt economic stimulus measures in the coming years, boost economic activity, and promote employment. Several measures have been adopted to improve the business climate, such as the fiscal benefit law and the improving of the private investment law, but we have still a lot to do. The central bank has reduced the reference interest rates, the BNIA rate, but still high, still in 19.5%. A set of programs to encourage credit at rates more accessible to families and companies were created by the government. Several significant projects are underway in the country, such as the newly built airport and 3 new refineries that should help eliminate the need to import fuel. With the current oil refinery, having the capacity to meet only 20% of demand. Rating agencies such as Moody's, Standard & Poor's, and Fitch have improved Angola's sovereign debt rating and outlook. So a set of factors that to be honest, lead us to believe that there is a lot of potential and that the coming years will be better for Angola and the Angolans.
Thank you very much, Shania. I find that really interesting, and I want to go quite granular when we get to the panel discussion in terms of what you're hearing from investors, what kind of questions they're asking you, because we have quite a global audience on this call. So I really appreciated that. I'm going to just move on to hand over to Fergus to take us through, just go into a bit more detail. In Kenya, Fergus regularly travels to the region and can tell us what's going on the ground. Over to you, Fergus.
Thank you. Yeah, first of all, thanks for hosting this meeting and for having me on. I've only got about 5 minutes, so I'll try and keep this focused down. Mainly, I just want to talk about the cabinet appointments and kind of what those reflect about Ruto's leadership style and maybe a bit on the approach going forward. So on the cabinet, we've seen the vetting of cabinet secretary nominees by the National Assembly over the last week or so. And where we're seeing a difference already from the Kenyatta administration is that a higher proportion of these appointees are kind of really politicians and political allies rather than technocrats. So, many of them are kind of highly prominent figures from the Ruto campaign, with the exception of a few dockets. The Treasury is one of the exceptions, but Ali Khan may discuss that a bit further after me. Most of these are political allies from Kenya Kwanza with kind of limited ministerial or past technical experience. Some were already elected as MPs or senators in the August elections and now need to resign and trigger a by-election in order to join the cabinet because of the Kenyan constitutional system since 2010. And I think that political nature of the appointments isn't just about the individuals, but also about the creation of positions. So one clear example is Musalia Mudavadi, who's been appointed to this new position of Prime Cabinet Secretary, which is new and was created by Ruto through an executive order. And that really kind of reflects the elite bargaining that we saw during the campaign period. So this kind of political nature of the cabinet is partly a result of those circumstances and the way in which the campaign was run. It's been pointed out that there are, a disproportionate number of members from central Kenya. Again, that kind of reflects the significance of the political networks from that region and how critical those were to Ruto's win. So I would come back maybe slightly to Angus's point at the outset about this being a pragmatic result in Kenya and say, yes, economic issues were important this time. They were, a key feature of the campaigns, but we also do still need to look at those kind of ethno-regional factors and how Ruto built his coalition through elite bargaining and the local networks that were involved. And just to come back, I guess, as well to the point that was raised by Alex and by Desne, when we look at ethnic politics in Kenya, I think in this case, important to look at it not just about kind of group difference, but also about in-group dynamics. When we look at the lack of support for Odinga around Mount Kenya, a lot of that came from a sense that Kenyatta hadn't kind of delivered for his own ethnic group, the Kikuyus, as well as kind of the historical background there linked to Odinga's group, the Luos. We also need to look, I think, beyond the cabinet to the key advisory positions. Ruto's appointed a number of very close economic advisors. In particular, David Ndii is chair of the Council of Economic Affairs. He was one of the masterminds behind the campaign strategy, the bottom-up model. And there's also some advisory positions which Ruto are kind of is claiming are sort of cabinet level to get around the constitutional limits on the number of people he can have in the cabinet. So, for example, Monica Juma has been retained as a national security advisor at cabinet level, as she's an experienced figure. So worth looking beyond just the kind of standard ministerial appointments there. All of that, I think, points a bit to Ruto's leadership style. He's very driven, quite a ruthless political operator. He does draw upon a very tight and loyal inner circle. Some might say that since his split from Kenyatta, he has adapted his approach slightly. He's been more willing to draw on advice from technical advisors like Ndii on the economy. So I think that approach will continue. And then those wider political appointments, some of that is about the recent election and those networks I mentioned, but it also, I think, has one eye on 2027, looking at that tight margin of victory from August and keeping some key players on side and within his coalition. One example there may be Alfred Mutua, who's been given foreign affairs despite limited experience in that area. In terms, just quickly, in terms of the bigger question of whether this cabinet will be able to deliver, some suggestions that the political experience may be beneficial in some respects. In the past, cabinet secretaries have been seen as overly technocratic and kind of poor communicators with the public and quite divorced from the legislature. But then on the other side, a lot of these nominees have limited experience in their fields. Several have outstanding criminal cases in court. Given their wealth declarations as well over the last few weeks as required by the Constitution, I think there is a slight clash there, a danger of undermining the credibility of some of Ruto's campaign narratives and creating a sense of plutocracy there, together with the cost of living crisis and the nature of that close election victory that could potentially spell some trouble further down the line for Ruto's popular support. just quickly, I'm probably running a bit short on time, but on the campaign policies, we know this is a really deeply constrained fiscal space that the government is operating in. The debt remains a particular worry. There's a looming concern there in terms of a $2 billion Eurobond that's coming due in 2024, together with repayments on the loans to China for the 5.3 billion for the standard gauge railway. There's a really tight fiscal situation. Kenya did try to roll over that 2024 Eurobond by going back to the market earlier this year, but they found that borrowing costs had pretty much doubled since a year ago, so cancelled that planned issuance. And when you dig into kind of the IMF's debt sustainability analysis, the reason why Kenya failed those stress tests and was kind of upgraded to high risk of debt distress was that 2024 Eurobond rather than the China loan specifically. And we are seeing a U-turn on campaign promises as a result of this lack of fiscal space. In the last week, Ruto's announced that Hustler Fund won't be interest-free loans as promised, and will require signing up to a pension scheme, and also looking at restructuring that debt now, which was he said the opposite during the campaign. So I'll wrap up there. Sorry for going a little over time. Thank you, Desne.
No, that's absolutely fine. I thought that, I've been quite interested to see the return of Ndungu to the cabinet, a very prominent economist and figure on the global stage. So I think you're right. He'll have some of his own ideas of what he'd like to see happening in terms of the macroeconomic measures. But, as we've seen here in the UK, nothing wrong with a steady hand on the Treasury. So, to, keep the nerves of the global markets and investors calm. Ali Khan, I'm sure you have a lot to say about, the Treasury and the business environment and what investors need to be paying attention to in Kenya. We have a big East Africa following here at IC Publications, and I'm going to hand over to you.
Thank you, and thanks for having me today. If I can just follow on from what my predecessor was talking about, which was the limited fiscal space that's available, and just start at that. I mean, it's a very difficult scenario that the incoming president has inherited. The overarching challenge, in my view, is a macroeconomic one. And this lack of fiscal space that was mentioned. So, there's a strong perspective that some kind of restructuring, reprofiling, and debt forgiveness, or, some kind of admixture of those three has to come into play, notwithstanding the fact that Kenya occupies this sort of central geoeconomic pivot state status, I would argue, which has given it much more multilateral support than maybe other African countries could rely on. It currently is very dependent on that support. Debt service to revenues is 60%, which is a very, very high number and leaves very little room to implement the programs that the president was speaking about during his campaign period. And I think the key issue here is how to start bringing pressure to bear on that 60% figure and getting it down into a more reasonable range. The World Bank increased its Kenya portfolio from about $5.9 billion to $11 billion in 36 months, and has been doing most of the heavy lifting. If you're looking at the entire debt mix, they've been the single biggest support for Kenya in this difficult period. The IMF have gone up from about $500 million to about 1.75 billion, so not as big as the World Bank. Outstanding Eurobonds, which were touched on in the previous presentation, are around $7 billion. And while it's not trading at levels such as Ghana's trading at, which is essentially a distress, they're still trading on a very weak side and assuming some kind of debt negotiation has to come forward. The governor of the central bank yesterday was very interesting, and he was complaining that the multilaterals were drip feeding support into Kenya and needed to, at this point in time, go bigger, go larger. And that was some comments which were carried in the Standard yesterday. In the dynamics of the administration's appointments, it's quite interesting, you know, Njuguna, as you mentioned, highly respected, internationally recognized, seen as having been a great promoter of the mobile money fintech revolution that happened in Kenya. You know, has made in his presentation during the vetting, was saying very much that we needed to address this problem with the amount of money we're using to service debt. But also what's interesting, I think, is you have Njuguna and David and Dee on one side, highly respected, but they seem to me to be in a little bit of opposition at the moment to the central bank governor, and probably have a different outlook as to how to handle the situation at the moment. The biggest drain on Kenya's finances right now is the debt owed to Beijing, just under $7 billion, but interest is quite high, and the repayment period is not very long. So I think a key challenge for this administration, I think the next key challenge is going to be renegotiating that debt with China, either a massive extension, reducing the coupon, but something will need to be done. There was a lot of aggressive talk pre-election that died down a little bit, but I think, you know, you will need to have some renegotiation on that front. And if they're going to do that, they're not going to be able to give us the details of the contract that sits behind the SGR. I suspect the Chinese have said as much. We've got a cost of living problem, 9.2% inflation, the last print, but I suspect the president's made a decision that it's better to take the economic pain at this point of the political cycle when no one's got a vote, and hopefully have the economy returning to a better position. I would argue, if they get things right, within 24 months. His program of $420 million, which is, you know, the cherry on his economic program, is this $420 million package, which is designed, the Hustler Fund. Look, I think that money will be availed some way or other. I mean, they've got away from seeing it as a free money type program. They're going to have single-digit interest rates applied to it. You know, the very positive thing about Kenya, it's a highly entrepreneurial, SME-orientated economy. So, you know, if you have a proper structure around such a program, from a risk-based point of view, it's not as poor a risk as you might think it is. Actually, you know, it would have a multiplier effect, I believe. It's a tough period for the next 24 months, without a doubt, and a lot will depend on the kindness of Kenya's friends. It's not clear to me, outside discussions with the World Bank and the IMF, how much conversation is going on with the other creditors, but I'm sure it is. But overall, I would say, look, you know, there's plenty of room for the recovery. It's going to take a couple of years, however, to really feed through to the ground level.
Thanks very much for that, Ali Khan. I found that also very interesting. I just want to remind, we've got quite a few people on this call, and we invite you to please send your questions to the panelists. We'll start taking questions now. There's the Q&A button, which is 1, 2, 3, 4, the sixth button, so sort of in the middle of your screen. There's a Q&A chat button, and I'll be looking at questions there. We've had 1 or 2, but be good to hear any questions. Yes, we've got another one coming in now, so thanks very much for that. Okay, so I'm tempted to just sort of let you talk to one another, because it sounded like you all have quite a bit of questions for each other. Alex, shall I hand over to you and ask you to maybe pick some brains on this call? I think there were some very interesting points from both Fergus and Ali Khan especially, and that, you know, I personally would like to know more on the investment environment. But what's on your mind? Alex?
Sorry. Yeah. Well, what on my, I mean, both Kenya and Angola, it is the economy, you know, and that's why we're talking about it. It is, how do you get economic growth, create jobs, provide opportunity? Of course, Kenya has a more diversified economy. That's what compared with the Angolan one, as Janio has highlighted. The Angolan conundrum is that they have higher oil prices now. So the fiscals are looking better. The debt to GDP ratio is on the way down at the moment, although it will probably go up again next year. But I suppose it's what's on my mind is a question really for Janio more than for Ali Khan or for Fergus, which is, how does Angola successfully diversify away an economy that is so dependent, so addicted on oil? You know, is that possible in the Jalou second term? It is in a context where oil and particularly gas has become even more of a strategic premium in the short term, particularly for Europe, given the Russian invasion of Ukraine. So Janio, I don't know if that's on your mind, but that's on my mind.
Thank you.
Can Jalou diversify the economy?
Alex, we here in Angola, we've been talking about diversification of the economy for I think almost a decade or 2 decades. So in 5 years is impossible. Is impossible. But I think for the people that for us, for we Angolans, we want to see steps on that direction. More, we know is a hard, there is a hard work to do, but we need more steps on that direction. What we saw now was an increase of taxes in non-oil sector. But we want to improve the non-oil sector. We know that the time was really hard. Angola was being compared to countries like Venezuela, for example. Was a tough time, really tough time. And now we want to see, because even the current administration, the current government, they have to deal with a country with a real economy. You know, now everyone wants to see him with more fiscal space to do things, with higher revenues or revenues. We want to see what he can do with more, because for 5 years he has to do more with less. Okay, and okay, there'll be here you have people divided. Some will say, okay, you should do more, but it's really hard and was a really tough time. And economists can understand better because they know when they are imbalanced, you cannot grow with imbalance. You need to solve the problem first and then look for growth. And that's what we're waiting to see. But we have to be honest. We have a lot of young, our population is really young. So there is a strong capacity to produce, you know, but we have to improve a lot of things. For example, property rights still a problem here. Okay, to own a house, a car, still there is a lot of bureaucracy. Okay, but we see the effort to tackle these issues, try to simplify, you know, but it's not enough. It's not enough.
Janio,
Thank you, Janio.
yes,
You've answered very clearly about the need to diversify the economy, but the difficulty in doing that because of the addiction of oil, but that Angola at least doesn't have COVID at the moment, and it does have the benefit of high commodity prices to provide broader fiscal space. Thank you.
Yeah, no, thank you very much for that question, Alex. I maybe will ask, we've got quite a lot of questions coming in from the audience, and seems that we got 10 minutes. May I suggest that we skip the discussion between ourselves, or maybe just hand over to my colleague, Angus. Angus, do you have any, some of the panelists have responded to our notes that we put out, and to your presentation specifically. Do you have anything that you want to respond to before we turn to audience questions?
Yeah, so I think what Alex said about the Angolan result being more about disengagement than any kind of ringing endorsement of the opposition is valid, and I think that that's important to keep in mind. Perhaps I was slightly hasty in suggesting it's inevitable that the regime will change, but I think what's fairly clear is that the regime's sort of unitary power is weakening. I think that the result in Luanda is incredibly important, with 60% of Luandans that voted supporting the opposition, which has never happened before. What I'm particularly interested to find out is exactly what that represents, whether that's, I've talked to people who've suggested that it's sort of a middle-class result, a middle-class revolt rather. It's sort of people whose living standards have increased a little bit, who are then upset that that increase in terms of economics and politics and sort of social space hasn't continued and are now disavowing the regime, or whether that signals some kind of activation of the massive urban unemployed youth that everybody's been saying, they're increasingly digitalized, they're increasingly cosmopolitan, they're increasingly sophisticated in their political behavior. When are they going to start to change the status quo? I think that when we see events like what happened in Luanda in these sort of massive urban centers, I think it's really interesting to think about exactly who is sort of behind that result. In terms of Kenya and ethnic politics losing relevance, again, I think that it's unfair to say that they're completely irrelevant, because obviously they're not. But I would agree with Fergus again that Mount Kenya backing Ruto against really the wishes of the outgoing president was very significant. Also, the fact that we don't have a Kikuyu president in Kenya, I think is significant in its own right. So again, whether those sorts of macro political attachments come back once the economic situation stabilizes, or as some of the panelists have suggested, the economic situation becomes even worse, it's really anybody's guess about what's going to be the sort of dominant political force in the sort of short to medium term.
Okay, thanks very much for that, Angus. And we've got all the questions coming in at once now, which is what I thought was going to happen. So I've been trying to, hopefully we get to all of them. I think I'm going to turn to Fergus and Ali Khan. Fergus, you first. We've had quite a few questions on political instability in the region. Also some concerns on Darfur, the militias in Sudan, affecting the region more broadly, and I think terrorism more broadly. That's quite a lot to pack in. If you can do it in a minute or two, that would be good.
Sorry, I haven't seen a question about Darfur specifically. That wouldn't necessarily be
it's
my
kind of no. It's kind of a regional question. Let's just pack it into regional instability and terrorism more broadly, militias, all of the kind of stuff that's happening on the political risk side and in East Africa and the Horn.
Yeah, I mean, I think you have a situation where Kenyatta was seen as more of a regional statesman and seen in many ways as more influential on the foreign affairs stage than in a domestic sense. Certainly by the end of his term, we've seen, very strong backing for from Kenyatta, kind of leading the way for the inclusion of DRC into the East African community, and relating to that, kind of the support for the East African standby force there. And I think, it's an open question as to the level of authority that Ruto will be able to command in the region on the same to the same extent. I think definitely he doesn't have the same level of kind of rapport that Kenyatta had built up in the region, but at the same time, appointing Kenyatta as his special envoy for the Great Lakes and for the Horn, points to an awareness of that issue and potentially, some, a smoother transition on the regional side of things. Of course, Kenyatta didn't attend the talks in South Africa that are taking place due to a scheduling clash. So it's unclear at this stage kind of how that's going to play out in terms of that relationship with Kenyatta in the region. And on terrorism, I think Al-Shabaab remains obviously a major concern for Kenya, but I think they're, continuing with steps in place, a kind of joint task force, a new system in place in Nairobi, and I think it's again, that's one to wait and see under Ruto how that develops. Thanks.
Fantastic, really well done. I'm going to address two questions that I will give an answer to, and then I'll hand over to Ali Khan. We've had a question about the different treatments of the narratives around African countries when we talk about democracy, corruption, and also I'll link that to a question that's been asked about debt write-offs and the reputation for the continent. I think I'll just say very briefly, it's something that I kind of parrot off quite a lot. I think what Brexit, Trump, and the political instability in the UK has shown us is that we can't sort of look at political risk as sort of something that only happens in the global south. I think global north has contributed significantly to political instability. We look at the invasion of Ukraine, all of those things going on. And I think we could maybe just see, obviously we'd like the world to be a more peaceful, prosperous place for everybody. But these developments are, I think, a calibration of how we ought to talk about Africa and the region as fitting into global politics as a kind of equal, region. So that's what I have to say on that. Ali Khan, there's the question here. Let's tie that also into like whether you think Kenya will default. The issue of debt, write-offs and haircuts, and Africa's reputation, and if you think Kenya will default.
Yeah, so just quickly to your point about political instability in the West, that's really an important point to make. I was on a debate on Al Jazeera, and the guy was a European, and he kept going back to how better governed Europe was in comparison to Africa. And I think, political leadership has failed, not just on the African continent. If it's failed big time in Europe, where potentially you have the collapse of a European economy, which no one seems to be really discussing beyond this existential war that they have with the Ukraine. So I completely take your point, and we just have to look at what happened in the UK.
Okay, before you move on to the debt question, sorry, Ali Khan, we're at 12:29. I don't know who would like to stay on the call. Maybe just if anyone needs to go, you're welcome to leave because we are on to time. But I think if you maybe want to just answer that last question, Ali Khan, and then we can wrap up, then we will go slightly over a minute if any of the attendees want to remain on the call. Thank you. Sorry.
My quick response to the debt question is that essentially the majority of African governments are bust. And we can see the train, it's coming towards us. Some it's coming faster, some it isn't. And in order to get out of this problem, we're going to have to go back to sort of Latin American Brady type program. And the problem is you're not going to find political consensus to achieve that in time. So what's going to happen is you're going to see things like Ghana, a currency collapsing 10% in a day, bond prices dropping. And there's a huge premium right now. The people who went first, like Hichilema in Zambia, whether by design or good fortune, are way ahead of those who are dilly-dallying. And I think this is a major, major problem that people haven't truly grasped. I don't think the World Bank and the IMF at this point have the capacity to put the amount of money to work that needs to be put to work immediately.
Thank you very much, and bonjour, ça va to all of our French speakers joining us on the call. There are many questions in French here as well. Unfortunately, we've come to time. We can't take any more questions. I'm really sorry for those that we've not managed to answer fully. We've tried our best in the time remaining. And all that remains is to say thank you very much to the audience for joining us today. Thank you very much to my fellow panelists, all very competent experts in their areas. And I certainly learned a lot from all of you. Thank you. Goodbye.
Thank you.
Thank you. Bye.